Hello everyone, welcome to the Channel Investor channel. Now if you're new to my channel, don't forget I have a lot of videos which can help you in your investing and trading journey. Now there are hundreds and thousands of channels on trading and I'm trying to focus and help you learn investing and trading with me. Now there are a series of videos which you can see in the screen right now which can help you learn seriously trading and investing. And if you follow my trades that I post every weekend I do post a video on a few stocks, and if you follow them you will also know how I pick and how I use my scanners to pick stocks. So if you're new to the channel, don't forget to stay till the end of the video, because I'm sure you're going to learn something out of this video, at least something related to technical analysis, and you might take it forward and it might help you in your trading journey. Okay, so without wasting more time, let's start off with the Nifty Outlook for this week, and let's see what Nifty is doing, what Nifty has done in the last week, and what are the next major support and resistances going forward. Okay, so I have the Nifty Outlook chart in front of me, and here, if you see, we had this crazy fall from 18,000 levels to almost 15,000. Now since then we have been we went up, we kind of retraced 38.2% of this entire rally and kind of took support here. A few weeks back I told you that we had an inside bar and I don't see the market still bearish, but what is happening of late is we are kind of consolidating. The last 4 days we're having a very tight range, right, and we're kind of forming this beautiful long-term consolidation here. Since the last couple of months we've not done much, we've just been going within this range, right? So overall for me this is just a consolidation in this major move up that we had. Market is just taking some time to digest this overall move, and we have some major resistance around 18,100 levels. Now given that this, if you see, I'm not sure if you're able to see this, we'll zoom into that shortly, but this support is a very strong, important support, right? Now, if you kind of break and take out this 18,100 levels, then probably we're going to head to all-time highs soon, or at least reach the previous all-time high and then consolidate and probably head higher from there, right? So for me, a close above 17,760 this month. So we are at the end of the month, and Monday is going to be the last trading day for this month. And if you can close above 17,760 levels, that would be the highest ever monthly close on Nifty. And now that's fantastic. That shows that markets are bullish and Nifty might head higher. Now what I'm going to do is I'm going to zoom into this area on the hourly charts. I'm going to show you what's happening in the hourly charts in the last few days. So on hourly charts, this seems to be a major resistance. Now we've had this rejection again. Now this is a gap that we had, and we kind of consolidated, and then we started this major move up. Right now, I feel that this, whichever side we break out, I'm not sure which side we might break out. My bias is obviously bullish, but if we kind of break below this, then it's a change in trend, at least in the short-term charts, hourly charts, but not yet in the daily charts. Now in the daily charts, remember that this is going to be a major support zone. Until we don't break this major support zone on the daily charts, we should be totally fine. But if you break this zone here, then you're probably going to test this zone again over here, right? And then probably might reverse. On the other hand, if you kind of break out above the zone over here, if you break out above this resistance over here, then we're going to see probably all-time highs again. It might not come immediately, it might take its own sweet time, but the trend would be completely up because of the overall bullish structure that we're seeing on the monthly charts. Okay, so that's the Nifty Outlook. So in today's video, I have 4 interesting stocks from the small cap space, 2 from the paper industry space or the paper segment space. Now, paper stocks have done well in the recent past, especially stocks like West Coast Paper and a few other stocks have done really well. But the stocks I'm going to discuss today have not done much, and let's look at these 2. So the first stock we're going to discuss is Shreyans Industries from the paper industry. So it's a tiny company, just 200 crores market cap. ROC is decent, the PE is also decent. Growth is not there much, probably that's why the stock is lagging still. But technically the stock is showing really good signs for a breakout. So I'm showing you this technical chart, the monthly chart. Now if you see this chart, I'm having since 2008, we had this major consolidation here, 8 years consolidation. Then we had this massive breakout and we had a strong move from levels of 40 to almost 200. And then we started consolidating again. Now for the last 5 years, we are seeing a very strong consolidation here. Right now since 2017, we're seeing a strong consolidation, and now we are forming a beautiful base here on the monthly charts. Now remember, this base is a very strong base and a setup for a very long move as well. Also don't forget, the volumes have been pretty good around the zone. The volumes have been strong, and the only problem is this stock has been lagging in terms of the entire paper industry. But for me, a breakout above the zone, which is 152 levels, we might see all-time high again very quickly, probably in the next few months, right? We might cross the levels of 250 and head much higher as well. So for me, if you ask how should I allocate stocks based on the videos that you do, right? Now, that's a question that a few of you have asked. Now, what I would recommend is, let's say you're starting today with me, take 5% of your portfolio. Let's say you have 1 lakh, take 5,000, invest in the stock and keep a stop loss and let it be there until the stop loss hits, right? Also, you should trail your stop loss as when the stock moves up. Do trail it, and if the stop loss hits, get out. So you start off with the 4 stocks today, allocate 5% each to each stock and just let it be there and see what it does. Now, what's going to happen is, in this entire journey that you're going to follow, if you invest based on my stock ideas, you will learn, and there are a lot of educational videos. You will learn along with me, and you will see slowly and steadily how you can make money in markets. Right now, that's a very slow and long journey, so do not rush into profits. And that's what I wanted to say before we move on to the next video. Okay, Shreyans, on the weekly chart, I just wanted to zoom in there and show you here. On the weekly charts, if you see, again, we're having this massive resistance. We had this downtrend breakout somewhere in the month of July, and then since then we kind of retested this trend line again. We again went up, we retested this trend line again. Now remember, this is the previous swing high, and that's acting as resistance right now. And the stock has been in a bullish trend, at least CCI has been bullish, but we did dip below here, and again we are going kind of up again. Right now, CCI also is bullish, rate of strength also is bullish, and now we are seeing some good signs this week. So what I'm going to do is, you should probably buy the stock right now at current market price, which is around 146 levels. Keep a stop loss around 126. Now that's a 13% stop loss. Now for a long-term portfolio or for investment candidates, this is a pretty decent stop loss. In fact, a very good stop loss. A 13% stop loss is a very good stop loss if you want to ride major trends. Right now, remember, you have to just get 26% returns just to have 2 times the risk that you're taking. Now that's a very good setup. And for me, this stock is the first stock I want to discuss. And I'm looking for targets of 250, which is 5 times the risk that you're taking. So 250 would mean 5 times around 60% returns on a stop loss of 13%. Now, that's the first stock today I want to discuss from the paper segment space. Okay. Now, the second stock is Reflex Industries. This is not from the paper space, probably from the chemical space. And again, a small cap company around 350 crores. It has a very good ROC and very good ROE, right? 23% is a pretty decent, in fact, a very good ROC. The P is just 8, so I feel the stock is kind of undervalued a bit. And it might catch up, the price might catch up in the coming months. We might probably head higher in terms of PE until the next quarter results come. So, right now, sales growth is not great, but profit has been decent. So I'll leave that in terms of fundamentals, just giving you an idea of what kind of company it is, right? Now, as I always do, I'm looking at monthly charts for Reflex Industries here. And if you see, we've had this crazy channel here, a beautiful long-term channel. Every time we take support there, so resistance there, and then we kind of go sideways. We took, here we took support, so resistance, and then we kind of went sideways, consolidated and head higher. Now that same thing is happening here as well, right? Now we have been forming a very strong consolidation for the last 1.5 years. This is a time correction as well, because kind of just went sideways. There was a slight price correction, but this is probably a time correction here. And now last month we saw amazing move with amazing volumes. Right now we are in the month of October. We are seeing a lower wick over here, and volumes have been good. So a breakout from this zone over here, and if you close probably any day or any week above the zone, then we're probably going to see a very good rally in Reflex Industries in the coming weeks. So I'm just going to zoom in this zone and show you on the weekly charts what's happening. Daily charts what's happening. On daily charts, this was the breakout zone over here. Now I'm looking at the charts from the Jan of 2022, and we had this breakout on this day. You see this nice candle. Also volumes picked up. Now after that, we had this nice consolidation with this monster candle somewhere in September, right? And after that, we had this nice correction. Now this is why I say don't chase breakouts. If you chase breakouts over here, you're stuck. You lose money, and that's not a good thing, right? So we kind of retested. We had this nice bullish candles here, and it took support right at the low of this mother candle, right, of the big breakout candle that we had, and it reversed again this week. So for me, this makes it a breakout retest candidate, and it's a very good setup. The stop loss is pretty low, and we can buy the stock at current market price. You can keep a stop loss around here also, but I'm keeping the stop loss around 135 levels, which is somewhere around here, right, which is around a 4.5% stop. You can also keep it around 145 levels. It'll be a much lower stop, around 9%, right? And we're going to look for targets of 250 again here, which is around 4 times the risk reward that we are having. Okay, so that's the second stock I want to discuss, Reflex Industries. The third stock is the second paper stock that I want to discuss, which is Pudumji Paper Products. Now, this is a slightly higher in terms of market cap, pretty decent ROC, ROE as well, and PE is also decent. Overall, the profit has been very good in the last 3 years. Sales has been kind of flattish, but overall, fundamentally, it is decent company. Now, again, I'm looking at the monthly charts in the Pudumji Paper Products. We had this breakout somewhere back in June 2021. and then we kind of corrected all the way to the breakout retest zone over here. Now this is also a confluence of support. Now if you don't understand what's confluence support, there is a video on my channel, go and check it out. Now this is the breakout, and this is a support zone over here, and here this is also the trend line support zone. Now when we have a horizontal support zone and a trend line support zone, now that is a confluence, right? So two support zones kind of merging and providing support for the stock, and we had this beautiful long week on this month, and now the stock went up, and we are kind of going sideways in the last couple of months or so. Right now this month, October, we still have 1 day left, and the stock is already looking good, and we might head higher. Right? Also notice the volumes have been very good in this last consolidation in the last one here. So it's all about breaking out and the stock heading higher also, right? So I'm going to zoom in this area and just show you what's happening in the recent months. Now this is a beautiful long-term resistance, horizontal resistance. And horizontal resistance also is a very fantastic setup to trade, especially if you're a beginner, if you're struggling. Just focus on horizontal breakout strategies, and they might do really well for you, right? Also CCI is doing well, excellent bullishness there. Rate of strength also has been very good since that move. The stock has not really corrected, even though the market corrected strongly, right? So also volumes have been picking up this week, and the stock is really looking good to head higher. So we buy the stock at current market price is 46, and keep a stop loss of 38, which is 17.4%. It's pretty deep, but you can also find your own stop loss. Go to hourly charts if you're a little aggressive and try to find a stop loss on hourly charts. Now these stop losses I give are very conservative, because a lot of you might not like stocks hitting stop losses frequently. I might like it, but you might not like it. That's why I'm giving conservative stops. But it's up to you. If you are aggressive, try to keep an aggressive stop loss and see if it works out. If not, just move on to the next stock. So we're going to look at for target of 75, which is 3.6 times the risk. So buy at 46 for a target of 75. And that's the third stock for today. Now, if you like my analysis till now, then don't forget to hit the subscribe button and like my videos, and also share this video with your friends. A lot of people are struggling still in the markets. Let's help them understand how to invest and trade in a proper way. Okay, so final stock for the day is going to be Kirloskar Brothers. Now this entire group has been kind of an underperformer in the last decade or so, and I feel that's probably going to change, just given the overall market structure, overall price structure of these stocks, and some stocks in the group's already moving. So I just feel it's a matter of time for this group also to perform, right? It's a small cap company, again, 2,800 crores market cap. ROC is decent, ROE is good, stock P is 28. Profit has been very, very good. Don't forget, the company has been doing very well of late. The margins have improved quite drastically, whereas sales have not improved. So something is changing fundamentally in terms of operational performance in the company, and that's why I picked this stock today. As always, I'm going to look at the monthly chart. Now, if you see, we had a strong move. We had this breakout somewhere, in the month of February 2021, where there's massive move, and then we've been correcting sideways, right? Now this is a strong consolidation, strong 1.5 year downtrend here. We've been forming lower highs here, and now we are kind of changing that structure, right? Now if you see, we're kind of forming now a sideways consolidation, a beautiful cup and handle. You can also call it a BCP on a monthly charts, on the weekly charts, and this 6 months has been a very, very tight consolidation. So volumes are increasing. Just observe the volumes also have been increasing. So for me, it's just a matter of time before the stock breaks out and heads higher. Okay, so I'm going to zoom into this area to show you what's happened. Daily charts, if you see here, we had this massive down move, again a move up, consolidation, move up, consolidation. Now just observe the correction that's been happening right now. Here we had a correction from 380 levels almost to 240, 250 levels. Then again we went to 380, but this time it corrected only till 290 levels. Right, so the correction here compared to the correction here is lesser than this one, right? Again it is lesser here, and again it is lesser here. Now this is tightening. Now this is called volatility contraction pattern. If you read about market memory books, this is what you call. I'm not sure if it fits perfectly into the pattern, VC pattern of market memory, but volatility is contracting. Now that should be the key takeaway for you. If you see stock like this falling lesser and lesser, then it's probably eventually going to break out. Now also look at the candles here, right? Now green candles, just watch the green candles and look at the volumes coming in the green candles. Now that shows every time the stock dips, there's a huge buying pressure coming in, and the stock again rises and goes up, and then it corrects again. There's a huge buying pressure. So just a matter of time before this again the stock also breaks out and heads higher, and I strongly believe that this is going to head higher. So what we do is we buy the stock at current market price, keep a stop loss around 320 levels. Now this is a support zone. It's a very strong support zone, also the trend line support, and we're going to look at now this is one of the smallest stop losses in today's video, 320 the stop loss. I'm going to look at targets of 500 or even much higher, given that Kirloskar Brothers is going to probably do well in the coming months, in the coming years. Now that's a 4 times risk, so 10% stop to 40% returns, almost 41% returns. And if you're investing just 5%, then try to ride the trends as much as possible, because if you're investing a small amount, then you need to make it really big, which means you have to ride trends. If you're investing a big capital, let's say 20% of your capital, 25% of your capital, then it makes sense to book it around 500 odd levels, right? So I'll leave you here. These are the 4 stocks. I hope you loved my analysis. Do let me know what you think about Kirloskar Brothers and the paper stocks that we discussed today. I'm sure you have invested in some other paper stocks as well. Okay, so that's it for today. I'll leave you here. Take care, trade safe, and trade safe. Until I see you in another video. Bye-bye.